Good evening, this is Rodney with the Triton Wave Market Outlook for Thursday, May 23rd, 2013. And this is brought to you by Triton Wave Consulting, which are based on the Triton Waves, which are early warning market timing indicators that can be used in all time frames in all markets. All right, let's start by looking at the S&Ps on the left-hand chart here. Until about this is right now it's 12:30 Central Time, 12:30 a.m. Central Time on the morning of Thursday, May 23rd. So at first it looked like oops, let me get this. At first it looked like we were going to maybe have a snapback at the end of the day, but I'm looking, this is like, let me see, Monday, Tuesday, Wednesday, so this is, oops, got the wrong guy here. Hang on one second. Okay, so this is Monday, we had a reversal. Tuesday was down most of the day, came back up, and it bounced off of the 8-period moving average. And until about 2 hours ago at 10:30 Central Time, this was kind of like hovering right above, hang on, let me make this a little bit bigger so we can see clearly. Okay. Okay, that's better. Until about 10:30, we were we were right at the 8-period moving average, and then all of a sudden, boom, this happened, and it's going on right now. We're down 975. So in the past 2 hours, it was only down like 125, 150. So we've dropped 8 handles in the last 2 hours, and I've been away from the computer, didn't really know why until I checked with I checked my favorite little spot here, which is the trading view, and this is the, let me make sure this is on the screen here. Okay. What I checked was I wanted to see what the Aussie dollar was doing, and the Aussie dollar is completely falling out of bed. This is a daily chart. So if we went to, I only show this in daily. The Aussie is completely falling out of bed in the last day. But look at this move down here. This is like already 5 days, 6 days old, 8 days old. That's a tremendous move down. Okay, so let's go to the yen. Okay, so the yen is moving up just a little bit here, as you can see, but compared to the Aussie dollar, the Aussie dollar is really tanking. So if you take a look at the Aussie yen cross, you see that the Aussie yen, I'm sorry, the Aussie is going down faster than the yen is going up, much faster, which is leading to this major sell-off. Okay, so it looks like in concert with the S&Ps now down 10 handles, 1,000 points. It looks like the scenario that when everybody's buying the Aussie, then risk is, hang on a second. When everybody's, pardon me for the pause. When the dollar is going up, let me get a different color here. Hang on. Colors, magenta. Okay, so when the Aussie is going up, risk on. when it's coming down risk off. So this risk on has been going on. This risk on has been going on since the beginning of January, and except for like a couple times where the S&P and the Aussie dollar went down, it's basically been straight up, being up, 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 and now it's coming down as of April, but it did not reflect what was going on in the stock market because our stock market was moving up, sideways, up, sideways, up, sideways, up like that, and that should have been with the Aussie the Aussie yen moving down like this, the Aussie dollar moving down like this against the yen, and the yen is actually moving down a lot. So by comparison, the Australian dollar is moving down more. This is risk off, and that's why we're getting 1,000 point move in the S&Ps. That is. All right, enough of this. So basically, we have cracked the 8-period moving average here. So maybe we'll have some excitement tomorrow. Tomorrow's Thursday. Maybe we'll have some excitement and we'll hit 1628. So because these levels here seem to be very consistent with what happens with the flow of the market, and these are all fib numbers. All right, so let's take a look at, let's break this down further and look at the 21 cash price on the ES. So this is just the daily trading, not Globex, and we see that this is what happened today. What's this? Hang on. Okay, so it started up, and then it just cracked the rest of the day. Okay, so overnight, even though it doesn't show it, we came down like this and hit this line here. We're right now at a low of 1645.25, which is this number right here. And if we crack it, it's just going to take us all the way down to 1630. Also, what I wanted to show you was that down below here on the bottom where my cursor is, it just went below zero in the last hour of trading. Actually, the last candle of trading at 15:03 Central Time. So why is that significant? Because if you look back here, this run since the last week of April, like April 20th, was the last time this short wave right here was below zero. And look at the run that it's done. It's gone from approximately 1550 up to 16, all the way up here up to 1680. So this is the first hint that there is there's a break in this trend right here. So we could easily just, boom, come down here, and this could take out a couple of these exponential moving averages. We could definitely come down to 1630, and according to what I'm looking at over here, when there's a break in the market for like 3 or 4 days, it came down through several of these layers down probably like to 16, even to 1590. So just be careful. I know I've been warning you guys for weeks now that this is going to happen. Well, it may finally be here. All right, let's look at Apple. I wanted to show you, since last September, Apple has been going down, sideways, down, sideways, down. Now we have a blip up. So let me let me on there's this trader site on Facebook that I post videos to, and I read this long thing that this guy wrote that he was completely convinced because Apple broke this trend line here, this long trend line going back to September, and it broke it, that we were now going to see prices up to this area up here. It was going to take Apple up to 600. So obviously he's long, and he's looking for a way to rationalize it. But it did, yes, it did break above this. It did break above this line, and then it ran into resistance. Let me open up this a little bit. It ran into some overhead resistance. This confluence of exponential moving averages here came back down here for a 50% retracement of this move between here and here. And now, even though the Dow is down, I think 85 points today, Apple is up 1 and I don't know, 130, 140. And even though the wave 1 and 2 are above zero, T1, T2, and T3 is just beginning. You know, you would think in a good market, if this were a good market, that this is just going to take off to 457 and back up to this area of 496. But if you're looking at the long-term thing right here of T4 and T5, it's just not going to happen. Market, it's you know, with the S&P's down 1,000 right now, Apple's going with it. Even though it didn't do it the first day, it's going to do it the second day. Believe me. If we look at Apple in 21, we can have a better idea. I think I remember 21. Yeah, okay, here we go. On the 21 minute chart on Apple, so this is just trading cash price. This move, it actually started off pretty high. It was up like 5 or 6 points, like everything else, and then it came down, and it finally cracked below zero on T1. So this is in a downtrend. This is in a slight downtrend. This T4 never made it above zero. Either some or all of it has been below zero since back in the first week in May. And T5 has been below zero right here, and the biggest wave here is about to go below. So this will go along with the daily look. So I'm looking for Apple to pretty easily come back down here and test 420. And if we draw this out a little bit, we can see from these waves here. These are the major waves. These are the real major waves. T4, when it took off from about 400 back in the beginning of middle of April, and it just took off from 400 to 465. All right. So then when it came back down in the first part of May, came down like this. Now, even though this looks like from here to here, it looks like about a 50% retracement right to 420. Bounce back up, which is again, if you measure from here to here, is about a 50% retracement. But T4 is still below zero, even with 5 days of movement to the upside. So this could keep on rolling over just like it did here for an extended period of time, and this will just keep on coming down, and this will keep moving down, and we will see Apple probably at 400 or its old lows at 380. There's no reason for it to be up. There's way too much competition out there for for what they're doing, and even the Android version of what they're doing is open to the public for development. It's not a closed off unit like the iOS system is for Apple. Okay, if we take, I'm going to just look at one more here, Goldman Sachs. And if we look at Goldman Sachs, it just cracked below zero on the on T3 here, and it's the first time since about let me see, since 5/14, so about a week ago, when it made this tremendous move up here at at uh, at at about 148. I think that's, let me see here. At about 150. So it went from 150 to 165. Interesting thing is that this popped up to about 164 and change, and then did this popped up from, like, this was up 4 points, and it ended up being down. Let me see, it was down. It was down a point, 1.39, but it was up to 164.47. So this was a really tremendous reversal. Let's see what this looks like on the daytime. I mean, on a day. Okay, well, you know, it doesn't look bad on the waves. I have to tell you, it doesn't look bad on the waves. The shorter term ones look terrible, but this does not look bad. So this could still come down another 2 or 3 points and still look pretty good. So I'd keep my eye on it, because we're now down 1050, and which on the S&Ps, which is the low of the day, the low of the night, and it is 1 o'clock a.m. So that's all I have for tonight. Oh, I did actually want to mention one thing more to go along with. Let me bring up the ES again here, just so we can take a look at it. ES Mini, here we go. All right, that's just rocking and rolling to the downside here. Actually, it's more fun to look at it on a, not the 21, but the, here we go. Now that's more fun to look at. I love it when there's a lot of activity. It just creates a lot of waves, and they're just fun to look at. You know, there's so much still water you can look at week after week after week. When the waves start coming in, it's kind of like the moon's influence on gravitational pull of the water system on Earth. You know, the tides coming in, tides going out, and you get these nice waves that go up, down, rather than in between the tides moving where the ocean is kind of still. Well, we've been still for a really, really long time. The waves, the stock market has just been going straight up like this, maybe a pause and then straight up again. But it doesn't do much for the waves, so the waves get kind of boring if they incline or decline too steadily. Anyway, I wanted to read you something that, or quote you something that I heard on CNBC on Monday, which is 2 days ago. And it was an interview by, it was an interview of Jack Bogle, who is Vanguard Group's chairman and founder. And he brought up some very interesting things. He said, you have to be careful in the stock market, because the stock market's total worth is $17 trillion. However, last year, we traded, all of us, you and I and everybody else out there, the total value, again, let me repeat that, the total value is $17 trillion. And we all traded $33 trillion worth of stock last year, which means we had a 200% turnover of the actual value of it with no real growth in the economy, which means that we're just trading with each other. We're not trading on the fact that the market may go up, you know, because the economy is growing like it did for like 30 years since World War II, 40, 50 years, 60 years. But it's like having coffee and talking amongst yourself, you know, telling stories. We're just trading with ourselves and against each other, and who has the better mousetrap to fake out somebody else in a poker game. That's what this is all about. Just be careful out there. Have a good evening, and I will see you at the next update. Just to remind you, I do trading for private clients, and I mainly trade gold for experienced traders, with experienced traders. And if you want to get in touch with me, please call me at, please email me at tritonwaveguy@gmail.com, and I would be happy to discuss with you the logistics of how it's set up and how we trade, give signals, and become a member of the team. Have a good evening, and I'll see you at the next update.